Ellen, are we streaming? Sunday stream. Also, guys, I think Vlad is going to be on in the last half of the session, so he might say something very interesting. So do stick around. All right. All right, we're going to start in like 30 seconds. Yeah. All right. Good evening, everyone, and welcome. This is Spectertrader, and today we are going to go over a weekly recap and discussion on the state of the market. Riley says, "What's up? What kind of chart is this? I'm confused." I'll go over that in a second. 1 second. Let me actually check something real quick. Okay, cool. We're live. Awesome. I'll do the intro again. Good evening, everyone, and welcome. This is Spectertrader, and today we are going to go over a weekly recap and a discussion on the state of the market. All right, so if we go to the 10-year, we'll start out with the bonds first. Since really the yields were something that was a pressing matter for about 2 months and caused a pretty nice sell-off in the NASDAQ and growth stocks. So it seems like the 10-year Treasury bonds has caught a bid, and so far we have made a potential bottom. Currently, the yields are retreating, and they are no longer a pressing issue for now. And everything seems to have stabilized since we started this new quarter, and we have these Japanese and Euro funds buying in. So it's not really the yields are not really a pressing matter for the market to focus on. As I mean, before people were freaking out about extreme inflation, and you have all these bond vigilantes shorting the bond market and selling it and causing quite a bit of turmoil in the growth stocks, especially because, you know, if you have growth stocks, they borrow a lot of money, and if the rates go higher, it makes it more expensive to borrow money, which is bad for the growth stocks because the cheaper it is, the more you could grow, essentially, to make it very simple, at least. So any sort of stocks with a lot of debt had a really bad 2 months, I would say. But like I said before, the market has a very short attention span, and now the market is probably going to find something else to focus on, whether it's, I mean, a few days ago, it was the capital gains tax hike. I'll get into that in a bit. But in the long run, I do believe that the yields will go higher, probably 2% at the very least, maybe a little more. But I don't expect anything so extreme. Even if we go to like 2%, it's really not as bad. I mean, we were much higher before the pandemic. So I would really not be that concerned. So yeah, the yields will go higher because we are likely to have moderate inflation. And again, everyone hears inflation and they panic. Inflation is not really a bad thing. Excuse me, can you mute yourself? Thanks. Inflation is not really a bad thing because before the pandemic, we're in a deflationary spiral. And actually, deflation is much scarier than inflation because if we have decent inflation, it actually increases the asset value for many of these companies, and they make more profit. If they make more profit, they can hire more workers. They can hire more workers, it's more prosperity. It's a good thing. Deflation, it's bad. You don't want deflation. So yeah, like I said, the bonds have caught a bid. This is a TN, by the way. This is the 10-year Treasury notes futures. Seems to have caught a bid, but personally, I don't like the long side on the bonds. Just seems a little bit sketchy to me. Although we are massively oversold, so if you have an appetite for risk, you could play along if you're okay with the risk. All right, now on to metals. This is GC, gold futures. So if you look at the gold futures, it seems like we are rejecting the previous breakdown level. You see, before, we were holding, bounce, holding, but recently we had a pretty nice breakdown below this 1800 level, and currently it is, sorry, one sec. Sorry, my dog was bothering me, sorry. Sorry, what was I saying? Yeah, so if you look at the gold futures, we have broke down at the 1800 level, and really, if you want to play the short term, and this is risky because gold futures is quite a lot of leverage, you could short against 1800 level. As long as we hold below the 1800 level, you could keep shorting it. But as soon as it clears 1800 and holds above it, I would probably stop out because it's pretty dangerous. And you want to define your risk. In the long term, though, I think the gold is quite bullish because it is a safe. You'll have safe haven inflows from the pandemic. If you look at India and several countries around the world, we're making new COVID records. So I really think that we'll still have a bullish bias towards gold because of that. And also likely that we're going to have some rising inflation, which is good for gold because nobody wants to hold cash. I mean, opportunity cost for holding cash is so great. Why hold cash when you can invest it? So either you put in some appreciating asset or spend it. And if you're not buying stocks, commodities is actually a great way to hedge against inflation because commodities will always move up with inflation. And not to mention, we will have lower interest rates. So I really would not overstay a short on gold, as this is something to keep in mind. It seems like we we are balancing a little bit on the gold on daily. So obviously you wouldn't want to short it here. That's quite bad risk reward in my opinion. You'll be chasing it. But in my opinion, until we find a direction above 1800 or we crack below this low and find some follow through, we will likely chop around in a sort of a balance, in the market. So basically, you'll see a lot of consolidation without any sort of direction. But yeah, like I said, you could short the top, you go long at the lows, but you really don't want to overstay. And the reason why we are quite choppy in the market is because there's sort of a indecision in gold. And what I mean by indecision is just like different factors that are playing into gold that are pushing and pulling it, such as, you could have multiple vaccine developments, if let's just say just some sort of problem with the vaccine that could cause gold to be quite volatile. And also the recovering global economy is quite bearish for gold, because you really you want people scared, so people will go into gold as a safe haven. But like I said, even with that, the long-term outlook for gold is pretty bullish. Other things that are pushing and pulling is, I already said, strong economic data and a weaker dollar. So weaker dollar is actually pretty good for gold. So yeah, like I said before, we're just going to chop around, but overall it's bullish. Another way you could play gold is you could buy some gold ETFs. I believe is GLD is Spider's gold ETF. And that's something you could use to play gold, and it's relatively safe. It's not leveraged, so it's not as risky as gold futures. But now we are going to go on to energy. Excuse me. So if you look at crude, we had quite a nice recovery on crude. I mean, the demand was just awful from the lockdowns, since no one was traveling, using airlines, very limited vehicle use. So just the price of oil just plummeted. And not to mention past events, such as there was like some sort of civil war type of thing with the princes in Saudi Arabia, which is also bad for oil. And not to mention disagreements with OPEC Plus. But like I said before, I mean, something like this, it only lasts for a little bit and before you see recovery. And now with the economy opening up, the lockdowns easing, and people are starting to travel more, out of pandemic weariness, I wouldn't be surprised if we see a huge influx in traveling and oil consumption in the next coming years. And we are quite bullish overall, fundamentally, on the oil. So I wouldn't be surprised if you see oil push to the 80s. If you look at, hang on, let me show you guys. One second. Let me show you guys bigger term picture. So if you look 2008, if you look at 2008, this is another reason why I'm quite bullish. Is if you look at 2008, it's kind of a rough downtrend line. But if you look at the 20-year chart on oil, we have been downtrending quite a bit on oil since, before oil used to be a dominant player in the S&P, but now it's had quite a retreat. But if you look at the chart technically, we broke above the 2008 downtrend, and now we're holding above it. So likely we're going to have a nice little breakout on oil. So yeah, like I said before, it'll probably go to 80s, maybe a little higher, but then you'll probably see a lot of US oil producers pumping oil like crazy, which will likely cause a pullback because it increases supply. But right now it's currently chopping around in a range. If you look here, it is chopping around 60s and high 50s. Trying to find a direction, but you can see the range is getting tighter, so I think it's preparing for another breakout. But you guys know how consolidation works. You get the range. The reason why we have consolidation is rather, is exhaustion of the buy side. If it moves up, it's exhausted. Now it's setting up for another move up. You got to refuel. You can't just go straight up. And until we have enough buyers to bring momentum to the upside, you'll see it chop around in range, get tighter, and then eventually when the buyers come back, you'll see a nice little breakout. Now, how you could play oil, well, I don't recommend trading oil futures because most people should not trade oil futures with 100 times leverage. That's how you blow up your account. But yeah, it's not a bad idea to go long oil companies. So you could buy some oil stocks. I would say a pretty safe play. Now I'm going to go over. Actually, I'm going to go over SPACs for a bit because I know a lot of you guys have bought SPACs in the last few months. So what happened was the SEC has forced many SPACs to restructure their accounting due to the SEC guidance on April 12th to include warrants as liabilities and reissue them, thus showing them as expense for accounting. Now, this caused a lot of SPACs to be halted from being brought to the market, and also it halted many ongoing mergers because they had to go back and restructure their accounting. It caused them a pretty nice sell-off. I would call it a SPAC apocalypse. But this is good because it will show to investors which SPACs are risky and which are safe. It will expose the highly leveraged ones that have issued a lot of warrants, and really you'll find out which ones are the shady ones, because there's likely a lot of fraudulent SPACs, and really it's just another pump and dump. Wall Street always finds new products, whether it's mortgage-backed securities and the global financial crisis or SPACs, because it's a hot product. A lot of these SPACs were just little scheme by Wall Street in order to make a quick buck. But anyways, this is good because it clears out the bad SPACs, and it will concentrate the focus on the good ones. Something like IPOE, which is a stock, it is a SPAC that I'm currently in. It's going to merge with SoFi, if you guys don't know about it. SoFi is an online banking app, to put it very simply, but you could also invest. You could send money like PayPal, and I believe options and margin trading is going to be available soon. So it's going to be a nice competitor to Robinhood. But yeah, like I said, I think something like IPOE, very good fundamental. The company it's merging with has really good fundamentals. SPACs inherently don't have any value because it's just a blank shell company, but you got to look at the company that they're merging with. Is it a good company? Is it like some of these companies, they're not good. Some of these companies that are being brought to the public should not be going public this soon, or is this like just junk? So you got to be really careful which SPACs you're buying. But anyways, this is good because we essentially the last 2 months we washed out the dumb money, and the risk appetite is it's really down. So we got rid of a lot of speculators, which is good for the SPAC market, because now we could all focus on the good ones. So a little bit of IPOE updates. So IPOE was one of the first SPACs to file amended S4, which is good. They're leading the way and they're showing a good example. So investors should have more confidence in this one. And now they are just waiting SEC approval of the merger. And then from then on, it will go on to the shareholder voting, which will take about 3 weeks or so. And after that, it's time for the merger. So we had a slight delay in the merger of IPOE, but this stuff happens sometimes, but I'm not really concerned. There's really nothing that's really changed for me. So I'm still long IPOE quite heavily. Now, let's see. Oh yeah, like I mentioned before, President Biden reportedly proposed to raise capital gains taxes as high as 43.4% for those making over $1 million a year. And this would fund proposals in Biden's America Families Plan. But this, in my opinion, I think this capital gains hike proposal to 40% is very unlikely to pass. There's a lot of opposition to it. Both sides, Democrats, Republicans, they all have plenty of stocks. I don't think they'll be very happy to be paying 43%. It's really a negotiating point, and I think Biden is really pandering to his Democratic base. Likely, you might see something like 25 or 30%, perhaps, but something like 40%, that's just preposterous. But yeah, let's see. We had pretty nice sell-off because of we had a pretty nice sell-off because of this news, and it caused the market to tank quite a bit on Thursday. But like I said before in the chat room, it was a massive overreaction, and really we're at a key level. What's notable is this is a market profile chart, by the way, guys. This is a record of time spent and the volume at each price level, which calculates value and fair price. But I'll get into that in a bit. What's very notable is actually, if you look here, if you look here, on Tuesday, we had a poor low, which means that we had a lot of people who are too long. So a bunch of short-term traders have gone long. And when it's like short-term traders and retail buying the lows, generally we take them out, because you really need institutional support to sort of support the market. But in this case, something that's very interesting is what should have happened, which was break the low and follow through, didn't happen on Thursday. You see, we rejected the lows. Wednesday, we just we didn't even test. We didn't even come anywhere close to this low. We just went straight up. And obviously, we had some news that caused people to, they use it as an excuse to sell. It wasn't really real selling. It's just a little panic sell. And then we went straight down. And yeah, we had a pretty nice rejection off the poor low, which, like I said, what should have happened is break through it, but we didn't, which is showing that we have quite a bit of strength in the market. And I mean, if you look at the overall market, we are pretty bullish because we had a nice little uptrend. I believe this was 12, 13 sessions without any pullback. Then we had a little pullback to this consolidation area. We held this consolidation area, which is very notable. And right now we are consolidating in this range. So as long as we hold really above 41.10 on the S&P, we are likely to go break out to the upside. Now, the key level to watch for the S&P is around 41.86 to 41.83. That's like a resistance zone. So in this zone, it's very important that we gain momentum and we break through it. And if we break through it, then we'll likely break out to the upside. If we can't, then likely we will chop around in a range until we find enough momentum to go to either side. But yeah, like I said, it was an overreaction. On Friday, we opened. We didn't even come anywhere close to the lows. And we just went straight up. Anyone shorting it got caught with their pants down and just got absolutely destroyed. But yeah, capital gains tax hike is just, it's all BS, man. It's all BS, guys. Yeah, so let's just say hypothetically it does pass. I think hypothetically, if this, let's just say in the universe where this passes and we do have a 40% tax hike, it will devastate the small guys, and the mega corporations will likely do well because the competition ends up getting snuffed and they'll take the market share. And then the mega corps can afford to pay this. So, and individuals will also be affected because, you could see a pretty nice sell-off in stocks because people don't want to hold. And I mean, no one wants to pay 40% if you're making $1 million. It's dumb. But yeah, I'd say it's an overreaction, and the big boys came in. Oh, on Friday, a very notable thing I've noticed is on Friday we had billions of dollars getting pumped into the ES through the dark pools. Dark pools it's a way to sort of buy without being observed by the public. So they basically could hide their buy orders and get filled without showing up on a tape. So yeah, so shorts got caught down with their pants down and squeeze the shorts. Also, if you pay attention, if you've been paying attention to the ES or the futures, you could tell that the tempo, which is the speed of how things move, is slowing down quite considerably, which means that fear is actually leaving the market. So we're getting to a more stable market, which helps with volatility. You'll see less volatility and you'll see more stability, I would say. Let's see. Now going on to stocks. Fang stocks. Let's see. Google. I would say most of the FANG stocks are quite bullish. If you look at Google, for example, we are chopping around. So we had a breakout. We're chopping around in a tight range. And now it seems like we're primed and ready to go break out. So if you're a momentum guy, you go long on that one. Let's see, Apple. Apple, I would say quite similar. You have a defined target, 145 is probably an area I would sell at if you want to go long Apple. Microsoft is a really strong one, I would say. You can see it's just chilling up near the highs. And Microsoft is another one you could play if you're a momentum guy. And if you're long Microsoft, it's good for you too, if you're holding Microsoft. And yeah, so we have quite a bit of important earnings coming up next week. I believe we have Tesla after close. What else? Tuesday, we have UPS before open. 3M, GE, Hasbro. After close, we have AMD, Microsoft, Alphabet, which is Google, Visa, Starbucks, Texas Instruments. Wednesday, we have Boeing, Apple, Shopify, Facebook, Spotify, Qualcomm, eBay, CME Group, Logitech. Yeah, it's pretty big. It's a pretty big week for earnings. Thursday, you got McDonald's, Twitter, Amazon, Caterpillar. Friday, Exxon, Chevron, AstraZeneca, Goodyear. Yeah, this is a pretty big earnings week, guys. So I would definitely pay attention because it's going to be quite fun, I think. Yeah, and we have some economic events on this week. So let's see. On Monday, we have core durable goods orders. On Monday at 5:30 Pacific, we have CB consumer confidence on Tuesday. Wednesday, we have OPEC. Let's see. Yep, OPEC's very important if you're in oil, if you trade oil. Extremely important because OPEC moves the market. Let's see, you get goods, trade balance, prelim, wholesale inventories. 11 a.m. Pacific Wednesday, we have FOMC, which is very important. We're having a FOMC statement at 11 a.m. Pacific, and 11:30 a.m. we have the FOMC press conference. So be careful on Wednesday because there could be some pretty big volatility going into the Fed. Likely he'll say, "Oh yeah, we're gonna keep the rates as low as possible. Might see some inflation, yada yada yada." Same thing as before. I don't think there's anything really changed. Let's see. Thursday we have GDP and unemployment claims, and pending home sales is very important if you're in any real estate related stocks. Let's see. Natural gas storage numbers. Friday we have core PCE price index. No, nothing really. Yeah, guys, I would watch Wednesday for sure. I think Wednesday is a very important day. I mean, yeah, wow, you have OPEC and you have FOMC on the same day. Now that's quite a lot. So Wednesday, I would be very careful if you're trading that day. But yeah, there's nothing much else other than that. Market looks bullish. FANG stocks look like it's going to break out and go long oil and gold. I think we have some questions. Oh, Vlad just joined. Hey, Vlad. Well, hang on. Is Vlad here?
Back. What's up?
Hey, man. Do you have anything to say for anyone?
Hey, everybody. I'm a fundamentals analyst. Yeah, sorry, I just kind of joined recently. I see you're talking about Microsoft, and there's going to be earnings reports coming up. It's going to be very important to see those earnings reports so we can calculate the value of the companies.
Right, and Vlad, we're going to do some webinars together to go over how to use financial modeling in Excel to determine whether or not stocks are undervalued or overvalued. And
yeah, and I can explain the concepts very clearly so that everybody understands them.
Yeah, it's good. It's good if you guys are long-term guys because I mean, you want to know the fundamentals of what you're buying. I mean, I'm not going to name any names, but I see some people who just buy stocks because it's hyped, and I don't think that's a viable strategy, guys. So I'm just saying.
Yeah, I believe it's better to do your own independent research rather than listen to like Wall Street. A lot of noise in the news.
Oh yeah, we got Sabri said, don't forget Clove and Palantir. Yeah, I think Clove is poised for breakouts. I mean, this thing is massively oversold. It's a healthcare stock. They're doing deals with Medicare. Yeah, Medicare. It's part of the Medicare plan. So it's quite. They're making quite a few deals, and it's this DOJ investigation is, I would say, is complete BS. And we have a significantly high short float, so I wouldn't be surprised if we see 15s. Just saying, guys. I know you guys have been long with me for quite a bit, but it's really a matter of patience. And Clove is something I wouldn't mind holding long term because fundamentally it's a really good stock. It's just been attacked by short seller firms, highlighting this DOJ investigation. It's just, they all have an agenda here, you know.
So you're talking about Clove?
Clove, yeah.
All right. Let me look at the financial statements real quick. 1 sec. You keep talking though.
Sure. And Sabri said Palantir. Palantir, yeah, like I said, it's a good long. The only issue I had with buying this before is that we had quite a few, not a few, we had a lot of retail money, these Robinhood Reddit guys buying Palantir. So you had quite an overcrowded trade. And I mean, these past 2 months, you know, it seems like we washed them out for now. Ideally, we have to break above 26 and 27 resistance zone. That's a very important 2 levels, because if we can't clear 27, then we might be stuck in this range until we gain enough momentum. But if we break this 27, we could probably fill these gaps at the very least. But yeah, like I said, when you have an overcrowded trade, you have all these guys one side, which is not good. You know, when you have everyone on the long side and buy side, it once things start getting really bad, you'll see like an over dramatic sell off. You know, we had this straight to the ground, you know, type of thing. It gets really ugly fast because they're all panicking and selling, you know, they're all weak hands. And not to mention, some of these guys are pretty leveraged on it, so it's not good. But, you know, I would say long-term trend here is pretty solid. I'm currently swinging this, actually. My price is about 24 average. But yeah, I mean, my target is probably the gap fill and the highs, and I'll hold a piece for long term because I think this thing could have potential. I mean, this thing has a lot of volume, could go to maybe 100 within a year. Yeah, it should be good. It's just a matter of being patient, really, guys. Really, the stock market is really a waiting game, you know. It really rewards the patient, and it always takes money away from the impatient. And what I mean by impatient is, you know, you have people who buy and then just can't take the heat. They get so impatient, and then they sell it and they chase another name. That's just, you know, going up on hype. That thing eats crap too. And then it's the same cycle. And, you know, most people lose money because they lack patience and they keep chasing these hype names. If you're chasing these hype names, you're just gambling. And gambling is not good. You have a better chance of making money in a casino. So I really highly recommend, guys, you find a viable strategy or whatever to find an edge in the market. Because if you guys are just trading blindly, if you guys are just chasing whatever stock there is on Wall Street, what are you doing? You know, yeah, it's really, it's not a viable way to make money.
Also, I just looked at Clove real quick. Their market cap was 3.6 billion,
Yeah,
or 3.7 billion, and they have a lot more cash than debt, so that makes their enterprise value higher than. I mean, that makes them seem a little bit undervalued because of their balance sheet.
yeah.
And this report was it was a 10K from March 31st, so that was like a month ago almost.
Mm-hmm.
And they seem undervalued. Maybe just generally looking at it.
Have you taken a look at their competitors?
I can look right now.
Another way to sort of determine if a stock is undervalued or overvalued is if you look at the competitors. Let's just say, you know, they have similar amounts of revenue and similar fundamentals. If, let's just say, stock A is worth 10 million in market cap and stock B and stock C are worth 50 million, but they make the same revenue, I would say then stock A is undervalued. That's a very simple way to determine if a stock is undervalued or overvalued based off comparison. Now, obviously, you could make more complex financial models to determine if, you know, take a deeper dive into the company's fundamentals. But if you want to do a quick one, and this is one way you could do a quick little analysis, a little assessment of sorts.
Yeah, I'm looking just in general, just some quick things. Clove, their market cap is smaller, a little bit smaller than the peers. They seem to have good growth. strong returns over the past month.
Yep.
Let me see, compare. I'm going to do some more comparing real quick. So their competition is like Cigna, Anthem, and stuff like that.
Okay.
Is that what you say? United Health Group Incorporated?
Yeah, because they're all part of the Medicare sort of plan.
Yeah.
So you could go with Clove for Medicare. And yeah, Cigna is one of the other companies listed, I believe, on the Medicare little list they have.
Let me see Cigna's enterprise value real quick. Hold on.
While we wait, is there any other questions by anybody? If you guys have any comments, concerns, questions, feel free to type in the chats or speak up. Well, I mean, it's really up to you. I mean, if you like to be, okay, something like margin, it could be either your best friend or your enemy, right? It's a double-edged sword. Okay, if you know what you're doing and you know how to manage risk, then yeah, you could use margin, within reason, of course, to bolster your position. But if things are like looking back, if the market's telling you you need to get out, you can't be stubborn. Like, do not be stubborn and just because if you're wrong, you better cut it off quickly, because with margin you could just go to zero. You could lose more than you lose everything. I mean, if you let your position go that much against you, you have a massive problem with risk management then. You're just being stubborn.
Yeah, risk management is like one of the most important parts of trading and investing.
Yeah. Now the reason why I say use cash and not margin is because really you shouldn't be. I think most people shouldn't take that much risk, and the reason why is because, well, if you make a wrong trade, and a lot of people are very, I think a lot of psychologically speaking, a lot of people have a problem with losing, right? They let their losing trades go way against them when they should have cut it off way long time ago. And then when they have winners, they always they always sell it too early. As soon as they see green, they panic and sell because they don't want to lose a green. It's a funny thing, really, this psychology when it comes to it. Yeah, the reason why I say hold cash is because really, if you're okay, unless you're buying an absolutely turd company with crap fundamentals and it's like hype and you're chasing it based off some bogus PR. I mean, let's just say a lot of small caps have a lot of bogus PR, which is that's why a lot of people lose money, because they think, oh, small cap, it's a penny stock, I can make a lot of money if it goes to $1 or whatever. It's a big trap, but they have like a bogus PR, and if you going all in on these small caps, then that's kind of asking for it, but you're gambling. But if you're buying a nice mid to large cap, even a mega cap, and it has solid fundamentals, and there's no problem, like let's just say it drops like 10% for some like some profit taking happens, or some earnings, like you see some funds dump their stock. But if you look at the fundamentals, they're pretty strong, and there's a lot of institutional support, which means a lot of institutions have bought into the stock. Really, you could almost never lose, unless you use margin. That's why I say it's good to use cash. It really keeps you safe, because really with cash on the long side, time is on your side. I think we have a question. What do you think of the stability of Chinese stocks right now? Chinese stocks have been taking quite a bit of heat. Yeah, I mean, we are quite oversold on Chinese stocks. I think something like Baidu, for example, you could swing Baidu, but to confirm that it's a good long, if you're long and you want to confirm that it's going to break out, it has to break above 228. But if it goes below this consolidation area, you better stop out. Something like Neo, I think Neo is the same principle. You have a stop below 34. Really, you have a stop because you want to define your risk. It is kind of chasing it up here. So, I mean, if if the breakout fails, you take a lot of heat. Maybe like scale into it if it rejects, worst case. But ideally, you want it. I mean, two resistance levels you want to watch it break is a 42 and let's see, 42. Yeah, 42 and 46, because 42 is important. You have some support here, outchurned resistance, and 46. You need to break above 46 to confirm breakout. The problem with Neo, it's an EV company, and I've seen the cars, but the problem is you have a lot of competition when it comes to EV stocks. I mean, you got Tesla, you got Volvo and Volkswagen, Ford, all the major car companies who has a ton of cash has some EV cars coming out. Now you could swing it, but I would not. I'm not sure about long term because you have a lot of competition, and Neo is a relatively new company. There is a lot of trust to be built, and a lot of competition. So I would be careful. VIPs. Yeah, same principle. All the Chinese stocks had a pretty big sell-off, but yeah, above 32. Okay, there's two ways to play VIPs. If we break above 32.5, that could be a long trigger. So if it pops above 32, you could go long for a breakout on a nice little dip if it dips, and as long as it holds above it, then you could play for the upside. But I would stop out if it fails, or you could be in anticipation. You could go long, but if it rejects the 32.5, then you better cut it off quickly because it's going to get stuffed and you're going to take a lot of heat. So that's two ways to play VIPs. Hope that answers your question. Riley says Doge. No, I'm not talking about Doge. How do you feel about SafeMoon? In my opinion, I think the whole crypto market is kind of in a bubble. So I would stay away from most cryptos in the short term. I mean, in the long term, I think something like Bitcoin, Litecoin, Ethereum should be fine. I don't know anything else about the altcoins. I'm not really a crypto guy, so probably shouldn't be asking me too much about crypto.
I think Bitcoin's like pretty safe, but it's not like the perfect cryptocurrency.
Yeah,
because it's been performing amazingly over the past, since it was created. So
I think Bitcoin has an advantage because it's the most mainstream one, and everyone knows it. When you think of cryptocurrency, everyone's like, Bitcoin.
Mm-hmm.
Everyone just
it's very popular. Yeah, it's not perfect because it's a little bit slow, but and then ETH is kind of a more risky one.
Right.
Ethereum.
I believe Cardano and Ethereum are competing.
Yeah, Cardano is supposed to be like it's supposed to have fixed the problems with Bitcoin and Ethereum,
Hmm.
but I don't know. I
Yeah.
need to research more about it.
And Litecoin, I believe, is like Bitcoin, but like a little smaller version of Bitcoin. Correct?
Mhm. Yeah, it's basically the same exact
Product.
technology,
Yeah.
and yeah, a lot of people are hyped on the altcoins like Ripple and whatever.
Oh, I
Tron.
think the problem with altcoins is you see, I mean, the thing with altcoins is it's kind of like the small cap market, penny stocks, right? They say, oh, it's
Mhm.
so cheap. Why am I going to buy Bitcoin? Why am I going to buy something cheap for like a few cents? What if it goes
Like
to,
Doge.
yeah, yeah. What if it goes to $1? What if it goes to the same price as Bitcoin or Litecoin? Then I'll be rich. It's a fantasy. I mean, unless
Yeah.
you really do your research, then by all means go long. But if you're like just blindly buying these altcoins, thinking, huh, it's only like 10 cents. What if it goes to $5? You're gambling.
Yeah, gambling is not a good way to make money. The goal should be to make money consistently, not like in a lucky way.
Yeah. Yeah.
Then you're a good trader if you can constantly, time after time, prove yourself. I mean, not prove yourself, but like make
Because
money consistently. Yeah,
exactly. Exactly. Because, yeah, you can make one home run
yeah.
and then you get all you get lucky, you make a home run, you get all cocky and think you're a genius, right? And then you just then you go into other stocks and you just constantly eat shit and after time
Mhm.
it's really no, it's really not a viable way to trade. I don't really call it trading, I just call it gambling.
Yeah, if you can consistently have a strategy that's profitable, that like it should be scientifically profitable, like measurable, because in order for your hypothesis to be true, it should be the same results every single time. So that should be applied to trading as well.
Yeah,
Make it scientific, make it so that your strategy works every single time, not um, and it has to be mathematical, not just lucky, you know, home run kind of play.
exactly. Is there anything else? Anyone? Any more questions from anyone? Vlad, are you ready with the fundamentals or with the financials or no?
Um, I just quickly looked at Cigna because that was the competitor of Clove, and I saw that their market cap was 87 billion, 87.9, and they were holding on to 35 billion in cash and 3.3 billion in debt. So that made their enterprise value 56.5 billion. So that means that Cigna is, according to enterprise value and market cap, Cigna is seems to be undervalued based on their most recent balance sheet because they have a lot more cash than debt. So enterprise value basically means um, how much would it cost for somebody to buy a company in whole. So if they're buying if they're buying the company and um, so if 30 like they're buying it for 87 billion because that's how much it would be worth, but 3.37 billion would be in debt and 34 billion of that would be in cash. So they would gain a lot of cash from that. That's why it seems to be undervalued.
Yeah,
But I can give like a lot of, on Excel, like showing you guys pictures and very clear examples. This is just off the top of my head.
yeah, sounds good. Sorry, you said Clove is undervalued because they have more cash than debt.
Yeah, based on the balance sheet, the most recent balance sheet, because the balance sheet is a snapshot of the picture in time. I mean, a snapshot of the company in time. So, their cash and debt is constantly changing.
Mm-hmm. No, of
But
course.
back on the most recent balance sheet, yeah.
Cool.
Okay, this guy asked, where do you look at the company's financials like you did with Signal? Okay, I basically look on the SEC website. I can link it right now. It's actually my homepage.
Yeah.
Because I look at the companies a lot. And you go on there, you type in any company you want, and you go to their 10Ks, or 10K means your annual report, 10Q means the quarterly report. You go to the financial statements, and there's the income statement, the balance sheet, and the cash flow statement.
Yeah. I pulled it up on my screen too. You guys can see the SEC website, right, guys? Yeah. Okay. So yeah, for example, we want to look up, let's say Clove, right? You just go to this search bar. It's sec.gov/Edgar, search Edgar. Yeah, okay. Anyways, so you go type in Clove, you look, scroll down. Okay. Clove.
Yeah, that's the first one.
First one.
And then you could click on, you see view filings. That's good. Yeah.
Yeah. So it gives you all the reports that have been filed in the past. But yeah, the most recent one said
the 10K and then 10Q is basically the ones to look at.
Yeah, this one, yeah.
Yeah, that was from March 31st.
Yeah, so
and then you go down. There's a lot of things that these financial statements will tell you basically everything about the company based on that time. Like it will say how many shares they have outstanding and stuff like that.
Yeah, hang on, I'm trying to get rid of this red line. Okay. Anyways, sorry. Yeah, we should show them like where they should look for the financial statements and information.
Okay, so go up a little bit.
Oh, you said up or down? Sorry.
Go up.
Up. Okay.
So like the first page. Yeah, I think.
First page.
Yeah. And then like you'll be able to click on it. So yeah, it's, you see item 8, financial statements, and yeah, item 8.
Item 8, yeah, financial statements.
Yeah.
Where am I? Oh, there we go. Haha. Item 8.
Yeah. Yeah, there we go. I mean, I could see their balance sheet. This is the balance sheet. So important things about it is there's the cash, the assets, and liabilities, and there's also shareholder equity. And assets plus liabilities. No, assets equals liabilities plus shareholder equity.
Gotcha.
Yeah. And the way it works is the top. So in assets, the way it works is it goes from top to bottom, most liquid to least liquid usually.
Right.
But here it seems to be a little bit. No, it's right. Yeah.
That's
so
right.
cash,
liquid.
Cash is the most liquid for sure. Yeah, then there's other current assets and prepaid expenses, deferred costs, marketable securities. That is liquid.
Yeah.
So I would consider this as cash too, because you could turn that into cash. That's, yeah.
Yeah, so anything very liquid is considered cash.
And then in the liabilities, I don't really see anything that I would call specific, like just debt. It's just, yeah, this stuff.
This is offering costs due to investors. Yeah,
maybe promissory note.
Promissory notes.
Not sure. Because I would usually call debt something that has the word debt in it, or loan or notes.
Let me see, promissory note. Yeah, promissory note is a signed document containing a promise to pay somebody. So yes, it is that. Yeah.
Okay. Mhm.
Let's see. Anything else
What
you want
else
to?
is there?
Total liability.
Yeah, I mean, I just calculated I just did a quick calculation on the enterprise value, and it seemed like they had more cash than debt because you see the marketable securities, it's 828.
Mhm.
That's million, I guess. It's not. It's just million. Yeah.
Right. Gotcha.
hmm It seems like this company. It seems a little bit smaller than most companies I look at.
hmm it's a recent it's been recently brought to the public market. So
hmm
they were yeah. So it was brought to the market through a reverse merge with a SPAC. So it's like an IPO, but they merge with the company to bring it public instead of IPOing because it's cheaper
hmm
and quicker too.
hmm
But yeah, I
Yeah.
would
So they
say something like
definitely
this
have more cash than debt.
I think something like this has a lot of growth potential because it's just started out and then it
Yeah,
needs
it seems like just generally it looks from the balance sheet at this time when it was taken, it looks like it was it's like a little bit undervalued.
Mhm. Yep. Is there anything else you want to go over on this section?
Um, let's see what else do they have.
Also, this is Clover. Yeah, so it's part of it was brought to the market by one of
Social
Chamat's
capital.
yeah social capital. So it was brought to public by one of Chamat's SPACs. IPOE is another one that's being brought to the public. So it's very interesting how all of Chamat's SPACs were attacked by short sellers, Clove especially, and then I mean even IPOE has a
Wait, so I see on the top, um, net income usually, it says net loss for them, so that's interesting.
Mhm.
So I guess year ended December 31, 2020. They were at a loss, net loss.
Yeah, that's what it seems like.
hmm But they have a lot more cash than debt, though. So
Yeah, so I mean, I don't think it's something to be
and plus the market cap. Yeah, the market cap was 30 something billion, or was it 3 billion? I don't remember.
the market cap. Yeah, it is
That would be like shares outstanding times
three
share
three
price. So that's like
3.45 billion
mhm,
is the market cap.
mhm.
Yeah. So, is there anything else you want to go over on this thing?
Well, basically the cash flow statement, it's a way of so the income statement is the bottom line is the cash flow basically, and um hold on one sec. The cash flow statement is basically like a double check on all the cash flows of the company.
Gotcha.
Yeah, you basically, like, if I use more specific terms, it's to reconcile the expensing or capitalization of all the costs from the balance sheet.
Mhm. Yeah, makes sense. Yeah. Um, but yeah, overall, like Vlad said, fundamentals for this company looks pretty strong, undervalued. So it
Yeah,
should be.
just off a general, like how much would it cost to buy the company versus the market cap,
Yeah.
which is a pretty big. It's a very important ratio.
Yeah.
Like off the first like look, it looks pretty good,
Yeah. Obviously, we could do a deeper dive with financial modeling using Excel and formulas, but
Mhm.
I don't think we really have much time for that right now. So keep it short and sweet, you know. Besides that, is there any more questions, guys, before we end it? We're gonna go more over these how to read these financial documents and use financial modeling to observe these companies. All right. Well, if there's no more questions, we're gonna end it right here. I want to thank you guys all for coming, and I'll see you guys next week. Thanks, Alan. Oh, and by the way, guys, if you guys missed some of the webinar, I'm going to post the notes in the chat room so everyone can see it. All right.